Good morning all, good afternoon, wherever you're based, and welcome to our webinar today. I'm Alex here from Xero, and I deal with all our partnerships here, so I'm just going to jump on today and kind of explore this cool webinar we have, make the intro to our awesome panel that we've got on board today. I've been pretty lucky to work for Xero for about 7 years, so I've been involved in the ecosystem and got to meet plenty of apps and accountants over them 7 years, so I'm really excited for the panel we've brought together today. It includes Ada, Ignition and Xero. Just so I know people are jumping on, if you are there, if you could hit a little hello box in the chat, just so I know I'm not speaking to myself or just the panel, that would be absolutely awesome. And just so we know that you can hear us. We're not expecting any technical issues, which is always the famous last words, but if anything does fall out for you guys, a little thing you can always do is just kind of come out of the webinar and re-go into it. But we will be recording the webinar anyway, and we'll send you all a recording after if that does happen. The great news is here at Xero, most of our content is CPD registered. So anyone attending today or anyone that watches a recording can use that towards a CPD point. So we're going to get that right. It's a little bit late here for me. I'm based in the UK, so getting words out might be quite hard. So yeah, as I say, it's brilliant to have you here. We've got the panel joining us today. I'm going to kind of hand you over to the panel in a minute and leave them to kind of talk all things advisory and end of year with you. I think it's going to be a good discussion. We're having a chat beforehand, and I think there's a lot of good stories that are going to come out, the human stories, as I call it, about advisory, the good, the bad, what's gone wrong, what's gone right. I'm excited to listen myself as well. So first of all, I'm going to hand you over to Brendan. He is the CEO and founder at Ada, and he's going to introduce the panel to you and just get the conversation flowing, really. So over to you.
Thank you very much, Alex. Great to be here, and thanks very much for sharing your evening with us. I know it's pretty late where you are, so really good of you to do that. Thanks to XU Magazine. Also, big thank you to our panelists, and I'm just going to go around and introduce them now, and I'll get to myself last. So I'd love to welcome Matt Prowse. So Matt, just a quick intro, who you are, what you do at Xero, so the audience know.
Hey folks, my name is Matthew Prowse. I worry about product compliance at Xero for the Southern Hemisphere. I'm a recovering accountant. I've spent the last 9 years at Xero in a range of different roles, and it's great to see so many familiar faces on this call. And I'm really excited to be sitting here today talking about end of financial year and sort of sharing some of the stories I have about life at Xero, but also how we translate some of those conversations with the revenue agencies in Australia and New Zealand, and sort of the sort of future of accounting as we go.
Awesome, thanks, Matt. Felicity. Yeah, there, Felicity, on mute.
Sorry, it wouldn't be a Zoom webinar, would it, without someone doing that? So I've done it for the team. No one else has to do it now. Hi, I'm Felicity. I'm based in New Zealand. I'm a director at Green Lion, and I'm a wife and a mother as well, and a chartered accountant. And we have a forward-thinking advisory-focused firm with about 2,000 clients.
Thanks very much, Felicity. Great to have you on board. I think this is the first webinar we've done together, so it's fantastic. Thanks for your time. Stuart in Australia.
Hey, Brandon. Yeah, Stuart from 542 Partners. I'm one of the 3 founding directors. Our firm is coming on 9 years old. We're a Xero Platinum firm and very forward focused as well. I'm a father of 3 boys under 3, so I look nothing like that profile picture anymore, but really excited to be on this webinar and to talk through these topics today.
Thanks, Stuart. Yeah, I was just thinking the same thing about mine as well. Startup life, you know. I've got to age that photo a few times. And then one of our good partners, Ignition. So Ethan, over to you.
Hey, Brendan. G'day, everyone. Great to be here. Real pleasure to be speaking with you. For those who I haven't met, I head up our partnerships team here at Ignition. Been with the business for about 4 years. We like to work startup in dog years as well. It feels much longer than that. I've been working in the accounting tech space for about 8 years now. Originally studied accounting, but decided to move into the tech side of things. Super passionate about how tech can enable accountants and bookkeepers in their day-to-day lives. And as of yesterday, I am mortgaged, and as of 6 months ago, married as well. So I see this theme here. You know, hopefully the profile pic stays true to form for as long as possible.
Awesome, congratulations. So, I mean, fantastic to have everybody here. My job today is just trying to unpick some of the stories from the experts and the brainpower we've got here. We've actually got 4 accountants. Ethan is also one, although, you know, very different views. So a practice in New Zealand, a practice in Australia, Matt giving Xero's view, Ethan giving Ignition's view. So I think there's going to be some really interesting things to find out. Ada is a new kid on the block. We're relatively new. We've got an advisory platform that helps, you know, our vision is to help accountants and bookkeepers move away from being reactive into being proactive with their clients and improving clients' engagement, making your practices a lot more efficient, and then leading to advisory services. Hence the subject of today's webinar. So I'm going to stop sharing the screen and just let you look at the panelists as we move into the discussion now. And you know, just to kick things off, I wanted to just explore the definition of advisory. So I'm going to open this up to everybody individually, and just, you know, it's such a commonly used term. Ethan says this to me all the time, and you know, it's been around the industry for a very long time. But what is it? What is it to you specifically in your firm and your, you know, or your background? So can we go to? I'm just going to go order of my screen for now. Stuart, we'll go to you first. How do you define it? What does it mean to you?
Yeah, Brandon, like you say, I feel like it's been such a buzzword now in the industry for such a long time. But to me, advisory is something that I think accountants have always done in one way, shape, or form of another. I think in more recent years, the term advisory to me is attempting to try and define more of the commoditization or service packaging of the service. So to try and, I guess, pitch it as a service, whether that's a routine or an ongoing or an annual service or a monthly service, but some kind of commoditized service that you're offering as a service line, in addition to, say, the compliance element of your business. So that's how I kind of view it in this prism. And then I guess from within that, if you look at that definition, it's about, well, how can advice be delivered in what ways, shapes and forms and mediums, and what systems and processes and automations do you use around that? That's kind of how I've viewed advisory as a service in more recent times.
Felicity, from your perspective?
Yeah, mine's pretty similar to Stuart. For me, it's sort of everything outside of compliance that an accountant does. It's looking at maybe forecasting, doing some goal settings with a client, meeting them on a regular basis, calling in an advisory meeting. But yeah, everything outside sort of that stock standard compliance to me is advisory.
How do you see that, Matt, from your Xero perspective? And I know you guys have, I guess, kicked off this whole move through real-time data from, you know, and accounting, and really invigorated and changed the whole industry. So where do you guys see that word advisory? What does it mean to someone like you?
So for me, advisory is about taking data, giving it context, and then translating it for a customer, so that you can have a discussion that ultimately is where you're providing guidance and leading them and supporting them through a decision. Like advisory itself is about taking all the data that, you know, the customer has, their question, wrapping it in context, the expertise that we have as professionals, as practitioners, using that context to then have a conversation and provide some guidance. Like fundamentally, that's the fundamentals of advisory, and we can package, it's almost packaging a conversation about the numbers of a business or a choice or a decision with the client in a way that they can digest and that they can take measurable, actionable steps from. For me, advisory is as simple as that.
Thanks, Matt. And then Ethan.
Yeah, absolutely. Echo what Matt's just said. I think from our perspective, given that we've got data on exactly how and what accounting firms are charging all over the world for different service offerings, it would certainly be more of a, and Matt made this comment prior to this webinar, but more of a question around how we package up and communicate this service to our clients, rather than necessarily a dramatic change in the service offering that the accountants are providing. We're certainly seeing just across the board with our practices, an increased revenue per client. So typically accountants are charging their clients more, but not necessarily doing more work, but just articulating and charging for the value that they have been providing I don't think it's something that is going to be a 180 shift away, or accountants that have not been doing advisory and they suddenly need to be doing advisory because they're going to become obsolete, nothing like that. But certainly charging for it and bringing it into the core part of their service offering is becoming more and more prevalent from our perspective.
Thanks, Ethan. And so this webinar is about advisory and that package up and that service offering and where you want to take the practices. But we also wanted to discuss the end of financial year element to it. And obviously New Zealand's been through that spike now. Australia's about to come up to that. And what we see, and you guys have been living this for years, but there's just a lot of chaos at that point in time. And there's kind of people won't do anything except because there's this massive mountain of things to do for end of financial year in the industry. Now, not all firms have that. Some firms seem to just go through end of financial year like it's just another month, but others are kind of down tools, can't speak to anyone, working long days and nights. So I wanted to unpick that a little bit and see, what is that for you, Stuart and Felicity? What happens in your practices around end of financial year? How painful is that? Tell us a little bit about what your work curve looks like. If we go to you first, Felicity.
Sure. End of financial year is far less disruptive to the whole practice as a whole now than it's ever been. I mean, an example of that is our team go out to lunch at 12 o'clock on the 31st of March, which is the end of New Zealand financial year. And we lunch for the afternoon. We celebrate our New Year's Eve. And rather than working to sort of 8 or 10 o'clock at night, which I know a lot of firms do. And the reason we get to do that is because of the focus that we've got in our firm. I think for a lot of firms, the end of financial year was sort of the goal. It was sort of the end point of where everyone needs to get to. Now the compliance is a lot more of a commodity. The focus is on our goals of our clients and advising them throughout the year. But it's also the tools and the practices that we've put in place, such as outsourcing, that enable us to do that.
I'd love to pick up on that in a little bit in the future there. We were talking about this a little bit more, Felicity, but that's really, really interesting. And it's so different to what we hear from a lot of accountants and bookkeepers that we're talking to. So that's fascinating that you actually take the end of your financial year and you go and celebrate it. You got the time to do that. I've got to say, well done for that.
And we found 98.15. So it's not like we stop at sort of, we've done the work when we celebrate it. So
you've got some processes, you've got some systems, you've got some tools that are enabling all of that. I'd love to pick up on that one in a few minutes' time. Stuart, how's your experience?
Yeah, I'm largely in the same boat there. I find every year that end of financial year comes around, it is getting easier and easier and smoother and smoother. And I think I could put that down to a number of factors, but more and more as our firm shifts to advisory services with a segment of our clients. But in addition, we offer every client a base level of advice within their compliance package. We are doing things during the year that we traditionally, back in accounting in the day, say 10 years ago, were always left to the last minute. And I think if you work that through, that's come from the evolution in data in a large part, because quite often we were reliant 10 or 15 years ago on a client providing us with information in order to do a tax planning session, for example. So we would have to obtain the data, book in the meetings, try and see your entire client base in a 1 or 2 month period before end of financial year. And inevitably that created a crunch time for your work. Nowadays, we're speaking so much more in depth and regularly with a segment of our clients that take a full advisory package, but also doing a base level advice within all of our engagements so that we're looking at tax planning activities, looking at wage settings, looking at dividend distributions, those sort of topics routinely, and not leaving it to the 11th hour in order to do that type of service. Really for us now, the last few weeks in the end of financial year is about recapping and proof checking the work that's already been done. So we should be recapping our tax plan, making sure everything's on track for what we discussed, any last minute tweaks or twinges. But, I've even taken leave in June, for example, which I never traditionally would have done, because we're in a position now that we can do so, which is, I think it's great. I think it's a great evolution for both the industry and the clients as well.
It's awesome. Really good to hear. And it's so different to The kind of conversations we're having with accountants and bookkeepers is, they want to get, often I want to get into advisory, but I don't have the time. I'd love to look at something now, but it's end of financial year. I don't have the time. You can't talk to me this month. It's end of financial year. Talk to me in a couple of months' time. And so we hear that a lot. So there's definitely a different behavior in other practices and firms out there. So really interested to see how you've progressed. And do you think that it sounds to me like it's avoidable? You can change your business. You can change your processes by using the right tools and processes. You can overcome those real spikes of work. So from Matt, from your perspective, from Xero's perspective, how are you seeing these key themes and change and evolution that Felicity and Stuart have just highlighted?
So I think it's fair to say both Felicity and Stuart run progressive firms. And I think it's positive to see the transformation in the industry. But at a macro level, what we're really seeing is this transition from either do it for me end of financial year. So our client literally would hand us 9 to 12 months worth of data and say, do it for me, to this do it together approach. And so we have accountants and bookkeepers doing it together with the client where the business happens. And what I mean by that is the systems and processes that the client uses to run their business are effectively where the data is now living. As advisors, we have real-time access to that information. We can see it on an ongoing basis. And we're actually doing the compliance work together throughout the year, which means when you get to the end of the financial year, there's a process that firms can follow to actually use the data and have the collaboration and the conversations with the client to actually reduce the pain and struggle of end of financial year. We do have to recognize the end of financial year is always going to be, for customers or for clients, a relatively complex time of year, because that's when regulatory change tends to hit them. That's when the minimum wage is adjusted, so all the industrial awards are refreshed. That's when new taxes are introduced or new measures come into effect. So the conversations before effectively the change in financial year and post are often about translating that regulatory change into a compliance conversation, the things you need to do to be safe and do the right thing, and an advisory conversation, the things that you can do together to actually take advantage of future-proof your business or future-proof your process. So I think we're seeing the technology as the enabler, but it's the enabler for this do-it-together approach to end of financial year and approach to compliance work throughout the year, rather than this wholesale shift from do it yourself or do it for me to this collaborative approach where technology is a mechanism. It's not in itself the process. At least that's our perception.
That's really interesting. So put together, meaning a lot more engagement regularly between the accountants and bookkeepers and their clients, not saving it till the end of the year. So it's kind of a thing that we work on together all the time, keeping that data real time, staying on top of things so that there's no panic at the end of the year. That we did a webinar with Stuart and another bookkeeper out of Australia with Ethan last week, and I think the theme, a lot of that was around client engagement, just regular touch points with the clients all the time, and keeping on top of things. So I think that's where you get into, Matt, with the together approach. Yeah, very interesting. What are you seeing, Ethan? Are you seeing that kind of thing as well?
Yeah, very similar, just with a slightly different lens. We're starting to see a lot of practices engage for those end of financial year tasks a whole lot earlier than they were previously, and starting to smooth out those ebbs and flows of work that you were referring to earlier, Brendan, start to actually package those up and start to capacity plan in a more of an intentional way. And I think that's because there's been a constraint on capacity with practices, whether it be hiring staff or not being able to hire staff rather. And so the need to actually get forward looking and actually plan out when they're going to be doing the work, that's definitely something we've seen as a shift. And then absolutely what Matt has been saying around the collaborative approach, we've been seeing a lot more of our advisors working with their clients throughout that end of financial year process. There's even just with simple things, right? Like the budget is a good example of this, getting on the front foot with providing the right information at the right time for your specific industry or niche clients, answering their questions quickly, whether it be in a blog or a newsletter or a webinar or whatever. Just getting on the front foot and getting out there early so that they are remaining that sort of trusted advisor. I kind of hate that term, but that's what they're doing. So we're certainly starting to see that engagement happening earlier than it would have done in prior years.
Really interesting. And you've actually just a great segue into the question I had next was around capacity. And how, Stuart and Felicity, how do you create capacity in your firm? And there's obviously people power, you can throw resource at it. There's tools to technology to smooth things out. There's Felicity, you'd spoken about it earlier, is about outsourcing. There's different techniques and tools and tricks that you can use to create capacity. Really keen just to dig into that just for a few minutes, Stu and Felicity. So starting with you, Felicity, how have you created this capacity to do what you need to do, which is both the compliance work as well as the advisory work?
I mean, it's a whole lot of facets joining together to create capacity. I mean, you need the right staff, you need good staff in your firm, and that's easier said than done at the moment. You need the right tools, but you also need the right clients. And I think accountants traditionally are really scared to fire clients. But I think if you actually look through at some of those, without a better word, delinquent clients at the end of the financial year that send their stuff in the last minute, that you have to spend months chasing, that then you invoice and they don't pay their bill, all that sort of thing, those clients probably lose a lot of firms a lot of money. So if you start with your client base and who are the clients you want to work with, and do you make money out of them, and can you train them? Your stuff needs to be in by such and such a date. Otherwise, there's a surcharge and the fee just goes up because your time is valuable. And I think there is sometimes a disconnect between the accountant and the client and the importance that they put on, which is understandable in some ways. But at the end of the day, you don't actually have to deal with those clients. We've found that if we take that time that we've been looking after or chasing some of those clients and put it in and service our good clients better, we get way more out of them. We make a bigger profit margin. Everyone wins. The other side of it is we do use outsourcing. I know there's sort of two opinions within the industry around that. We see the outsource team as sort of a intermediate and maybe a senior accountant. They do the work to that stage, and then we bring it in-house and we add value over the top of that, and our senior guys review it and get it into tip-top shape. But once you can send a set of accounts across in the second to last week of March and have it back at your desk the next morning in the sort of 80%, 75% done, it's an absolute game changer and able to sort of push those last minute jobs through, but enable the rest of your staff to keep doing their day-to-day roles.
Really interesting. Thanks, Felicity. And you touched on something about the clients and the quality of clients, which I would also like to come back to there as well, because that's something that comes up a lot in our conversations with accountants and bookkeepers. So, Stuart, let's just hear from you first around your ability to create capacity.
Yeah, and I think I'd just be building on what Felicity said there. I think just touching on that nature of the client, if you're pitching yourself and if your approach and mentality towards delivering services being an advisory focused and forward-thinking firm, you've got to have those clients that come with you, right? There's no point trying to pitch that to a segment of clients that are just not on that train track. I think the other element to all of this in terms of creating capacity is that if you're going to offer a really efficient and effective advisory services, you need to have your compliance component of your business in tip-top shape. It needs to be as schmick and automated as it can possibly be, whether you interlay outsourcing over the top of that, but that component of your business needs to be as automated, as process-driven, and as organized as possible so that it creates the capacity to allow you to then spend more time per client on the advice-based services. I think that's been our experience and it's been really crucial to being able to advance and grow that segment. From a staffing perspective, and totally agree, this market is really challenging, but what we find is that you get some direct correlation between the types of clients you're working with, the nature of the work that you're doing. So if it's more advice-based and more assistance-based in terms of business growth or development or whatever it might be, in turn, you get better staff engagement with the client and you get better staff satisfaction as an output of that decision taking that you've made. So I think all of those things then roll in together to lead you to have a more efficient practice from a compliance perspective, have more capacity to deliver advice, to have more satisfied staff, and to have the right set of clients using the right set of tools. They are sort of the matrix in which I think you can really advance your practice and really deliver an effective advice-based service offering within your organization.
So Ethan, you used the word capacity first, and so you guys have obviously done a lot of work in the space. And so what are you seeing? And if to use Matt's point earlier, Stuart and Felicity, I think are really progressive. And so is there a curve around the kind of businesses out there, accountants, bookkeepers, that have managed to get this kind of forward, this more progressive firms? What kind of percentage are we seeing, like a bell curve of some kind spread throughout the industry?
Yeah, and I almost want to fire a question back at Stuart on this one. The question around involving team members or sort of spreading the load of the client-facing work across the team to be able to deliver that higher value service is something that comes up quite regularly within our groups, within our customer base. So I think I'd like to ask you, Stuart, if I can. I mean, how has that worked for you guys in terms of sort of distributing that workload across your business? Have you been able to employ accountants that are looking for that sort of client-facing work, looking to be having those sort of higher-level strategic discussions with clients, or have you been able to grow them in-house? Starting from junior accountants, what's been your sort of approach to kind of growing that capacity in the practice? Because we're certainly seeing a pinch and sort of bottlenecks, if I can use that term almost, where a lot of this work is still flowing through directors or partners for the vast majority of firms, and it's very rare that we would see the progressive firms that have got this down to a T, where they can get their compliance business humming to a point where the team is able to deliver advisory. It's quite rare. So I'd love to hear from yourself, Stuart, or Felicity, as to how you've grown your team up to have those kind of client conversations.
Yeah, great question, Ethan. Probably, again, a number of components to it. But if I just break it down, I think in terms of the direct staffing question, I think that has to start at the recruitment level. And I think one of the things we're very clear on and making sure we do is to articulate the type of business we are and the way we operate. If we see candidates coming to us that just want to sit in back office and just want to punch out journal entries or whatever it might be, and don't really have that desire or skill set to communicate with client and explain outcomes and give some advice, they're probably not going to be suited to our organization. We've automated, outsourced, and process driven a lot of that work that traditionally was done back of office 10 years ago. So that work isn't there for us, and we're looking for people that can articulate and explain to clients. Like you say, advice is tricky because in a lot of sense, it does require some expertise, but it's also, advice is a spectrum, right? So it's about matching the expertise with the advice that's given. So yes, some things may need to be delivered at director level, but not everything. One of the things that we're really keen on doing is making sure that we always come to these advice-based meetings with two or more of our staff members involved, because A, that gives them insight and experience into those sort of meetings from a learning and education, but B, it gives them a seat at the table about more of what's happening in that client's business, which in turn makes both their advice and compliance better. We get a lot of staff satisfaction out of that, and that leads to eventually your team being upskilled and your team over time, and it might be months or years down the track, running their own sessions without that direct level involvement, and that's how you build out a structure and build out a service. So that's been our experience, but it's certainly, I'm not going to say it's easy, and it's certainly still a work in progress and a journey.
Felicity, did you have any thoughts on Ethan's question?
I mean, ours is very, very similar. It's not something you can learn in the classroom, that advisory skill base. We find the recruitment, the same sort of thing. You've got to hire someone at that level that is not only willing, but does have a sort of a commercial base, not that they've had to work in a commercial accounting role, but has an understanding of how the world works. If you've got someone, and I don't mean to pigeonhole some people, but if you've got someone that's lived at home their whole life and mum and dad have paid for everything and they've never had a job outside the home, and they have never been exposed, it's the exposure bit. Like some, don't get me wrong, I've got friends like that, but they've had conversations around the dinner table where they've been able to learn and get exposure to how the commercial world works. If you've got someone that's really green to that commercial, it's it's a low bar in terms of bringing them up. If you've got someone that's even worked in a retail shop through university, they understand a point of sale system, they understand the rostering part of it, they understand more than just the numbers. And I think, like Stuart said, it's spectrum. I mean, if we can start some of our people at producing a report out of Fathom and talking to some of the KPIs, but then also getting them to work out what KPIs are relevant to that particular business, what drives that business. I don't want to see debt to equity if they've got no debt kind of thing. Getting them to really think about what drives the business. And again, going back, if they've had some commercial experience around business, they're going to have more of an idea of what drives a business as opposed to sort of the textbook ratios. So it is time intensive. It's quite a journey. So finding the right people is really important.
That profile of the accountant and bookkeeper definitely seems to be changing because of this, and because of that, like you're talking about, there's a people element to it a lot more. The ability to, you've both used the word around client communication, client engagement, regular contacts, and so you've got to be client facing now to be able to do those things, rather than the old school back office accountant. So Matt, is this something that you guys are seeing as well from an industry persona change?
It's a consistent change, but I think a way to look at it is we're actually asking staff to bring context to work. And that's their life experience, but we're also asking them to bring context to the conversations that they have with a client. And I think that's that really interesting thing of data by itself is just that. It's rows or columns on a spreadsheet. It's a set of numbers. We're asking people to bring context to the data and use that to enable a conversation. And I think that's the important takeaway here. So we're looking for, and we're seeing it in the state of the industry broadly, an investment in storytelling, making sure that accountants and bookkeepers are excellent storytellers at every level of the practice, that they're excellent at translating complex topics. I mean, the interesting thing is a small business owner might do a GST return 6 times a year or 4 times a year, depending. An accountant or bookkeeper will do this hundreds of times a month, in theory, for a group of clients. They are experts. They have experience with some of these pieces of the process. The challenge and the onus on those professionals is to be able to translate that expertise and that experience in a way someone who doesn't do this 100 times a month or every single day can understand, interpret, and make meaningful decisions about. So yes, we're definitely seeing the composition of the accounting profession is changing in this corner of the world. It is more diverse than it has ever been. It is more flexible in terms of working environments and ways of working than perhaps the traditional impression of what an accountant or bookkeeper was from 20, 25 years ago. But if we're listening to both the panelists, the importance of life skills and context is actually saying that the accounting industry can be and should be a lot more diverse and far more perspective to kind of inform some of those advisory conversations. So it's not actually one about, so listening to Stuart and Felicity, it's actually not one about exclusion. You need to be extroverted with a whole lot of social skills to succeed as an accountant. It's actually saying, no, it's far more inclusive than that. You need perspective, you need life experience and context to be able to help people understand complicated things. And I think that's a recognition of how the industry has always operated, but something that we should be celebrating and calling out more as a profession.
100% agree, Matt. That's really interesting to hear. Just one of the things I really love about what you said about the interpretation of data and the human involvement and the experience. Our just from an ADA perspective, our advisory platform, the product name is Advisory Intelligence, which is just a little play on AI, because even though we are an AI business and we use artificial intelligence to do number forecasting and number crunching and analysis, we firmly believe that the best solution for small business customers is a combination of technology and AI and the human. So it's the human that takes that, the tech can do most of the hard work and present it, but then the human has to pick that up and have a really good conversation, has to interpret it the right way, has to do that next step and engage the client and be proactive and help those clients through, whatever's going on in their business. So, tech's never going to solve the whole thing. It's going to take it to a point where accountants and bookkeepers can then take the next step, help you be really, really efficient, but then take the next step and engage those clients, have those conversations, interpret that data. So, that's 100%. I loved you hearing explain that. Thanks for that. One of the things that I have to ask as we talk about packaging these things up and building efficiencies into the firm and creating capability is that something that you alluded to a little bit earlier, Felicity, is around the client expectations are not always the same as yours. And so there's two things that spin out of that. But the first one is around scope creep. And so how do you manage that when your client is expecting you to do something different to what they're paying for or what you want to do? How do you manage that, Felicity? And then I'll go to you next, Stuart.
Yeah, I think it goes back to who your clients are as well. I mean, our ideal client in our firm is someone that wants to do something with their business. Therefore, they want our advice. It's nothing to do with any sort of turnover or any metrics, any industry even. So once you've got someone that wants to do something and wants some advice on that, then you've got a certain mindset. So you've kind of broken down the first barrier in someone not wanting to necessarily pay for something because they're already there, they're wanting to do something. They just need someone to assist them in doing it. What we do is we do personalized packages, which is a little bit more time and effort than sort of an off-the-shelf one. But again, that's probably reflected of our client base and the size, and we can do it reasonably efficiently. From that, we usually it involves some sort of advisory service, which is just a meeting. An advisory meeting is just it's a watered down version of a board meeting effectively. And every time we have one of those, we get a piece of project work. And in our agreement up front, it's every project will be quoted and then invoiced separately. So we have the base service with the compliance, with potentially a GST, with a structural review, with we have a questionnaire which is sort of 80 questions based on the client and the industry, so we can get more of an understanding with them. And then it's usually some sort of advisory meeting, whether it's bi-monthly, quarterly, annually, twice a year, that sort of thing. And every time we have one of those meetings, as I said, some other piece of work comes out of it. And my follow-up notes after that meeting is, this is the project, this is what it's going to cost. They come back and agree with it, and then we go ahead on it. If you don't have that conversation up front, you won't run into a world of trouble, and that's where your monthly fee has to cover everything, and it never works. And take me back 4 years, I was exactly in that position, but it's having the conversation. If you have it, you can get no pushback on fees. Yeah.
Really interesting. Stu, I know we discussed something similar last week. What are your thoughts?
Yeah, look, I just think maybe to take a slightly different topic, I just think really the importance of your suite of tools as part of your offering is so critical to being able to deliver a service like this. I think from my experience, what's really important is you need to have a forecasting piece of software as part of your arsenal, whether that's a Fathom or a Spotlight or Futurely or whatever you choose. I think that's really important. But like the other panelists have said earlier, it's so important that that doesn't just become the service. You can't just spit out a report and give it to a client as a regurgitated piece of information every month. It needs context. It needs smarts. Putting a metric or a KPI on a report that has no relevance or no accuracy to it is so diminishing of the product and your offering that it does you such a disservice. So whilst you need, I believe, a forecasting software to deliver your service well, you need to also make sure that whoever's delivering the service, is looking at that very closely and making relevant comments and commentary, or using that to support the meetings. I think in terms of sort of supporting tools that you need to deliver, you need, in my experience, some kind of overlay across, if you're delivering this to a wide set of clients, you need some kind of what I would refer to as sort of portfolio-wide or client-base-wide metrics dashboard that can alert you to the things that are, I guess, in your client base ahead of when the client might contact you. Because the number one thing that we get as feedback from our clients is how good it is when us as their advisors have picked up on an issue before it became an issue, or before it became an issue that they knew about. And so I think some platform, whether it's an ADA or some other platform where you can look at those metrics, whether it's just a monitoring of GP or forward cash flow, or even just whether they're falling behind in the reconciliations, that all that sort of data helps to keep you on track as the advisor, keep you one step ahead, but also to bring up the tail, if that's the expression, in terms of if there's some stragglers, you bring them up to date. It means your compliance can get back on track. It means you can deliver your advice package. Outside of that, it's probably just a whole suite of tools we're probably used to. We're on a Zoom right now. I think video conferencing is kind of the norm for most of these advice services, especially over the last 2 years. Some kind of calendar application to make the bookings process really simple. We all know how hard it is to go back and forth 10 times for availability, but lock things in the schedule, send agendas out, follow up with agenda points and action items. There's nothing worse than not having no follow through. And I think that's the basis of a really good offering.
Really interesting, Stu. We hear a lot of that as well around small businesses expecting their accountants and bookkeepers to be a lot more proactive than reactive, and so that's a common theme all the time. And it sounds like that's kind of where you guys are heading to as well. So just keeping that regular touch point with your clients and be proactive and jump in there, let them know before it's a problem, rather than, at the last minute and they've got to suddenly pay a tax bill or something like that. So really interesting. And Ethan, just coming back to you around the scope creep piece, I know you've done a piece of work on this recently, so thought there might be some insights you could share with the team here.
Yeah, absolutely. And look, I think what Stuart said there around just generating these reports out of any which system and slapping an extra fee on the monthly retainer, it has never worked. In my experience at least, and with across our client base. I think with regard to scope creep, I mean, it'll be interesting to see what comes into play from a legislative perspective with client engagement going forward. And I'm sure Matt, in speaking with the industry bodies, one thing, an interesting conversation I had with the CPA team 2 weeks ago, they've seen a huge increase in professional indemnity insurance claims against practitioners. And a lot of the time, these practitioners were not actually engaged to do the work that they were doing for the clients. So when there is a dispute, whether it be a fee dispute or something goes wrong, and this is obviously particularly risky when there's loads of government money flying around, being properly engaged to do that work and actually submit those returns and apply for those grants and all that sort of stuff is really important, particularly nowadays when we're using a lot of cloud technology as well. You'll see that the industry bodies, at least annually will release updated sets of guidance around client engagements. There's specific terminology and paragraphs to include in your letters around privacy policies, ownership of data, confidentiality, all that sort of stuff. In today's world of using, tech and all these cloud systems that are hosting client data, that's vitally important that you've got your bases covered on that front. And then just from a service offering perspective, really just echoing what I said earlier, I think our customers are getting a lot more explicit and specific on what they're charging for each service and why. So there you go. We did a playbook recently around managing scope creep. Rebecca Mahalik, who's our head of accounting, wrote that from her experience in her practice. It's quite a cool playbook, so feel free to download that and give it a read. But ultimately, the core message is before doing any piece of work, send out an engagement letter of some description. Doesn't need to be through Ignition, but make sure that you get properly engaged through that work so that you're setting the client expectations up front. It's because it's really difficult to do that retroactively, as I'm sure everyone on the call would agree. But that's what we're seeing. Matt, I don't know if you've got anything to add there from sort of future of what client verification looks like and director IDs and all that cool stuff coming into play. But it'll be an interesting one.
I mean, fundamentally, as we sort of transition from this do it for me to do it together model, there's the concept of trust becomes really, really important. The trusted advisor is at the core of open banking in Australia and New Zealand. This concept of a trusted advisor, this registered agent managing our tax affairs. As we move to this, the role of trust and the importance of trust, part of that is actually setting out clear expectations. This is what you're engaging me to do. These are the services I provide. Ensuring that the customer and the advisor are starting on the same page, that every conversation that occurs throughout the process is taking place and we're still on the same page, and therefore the expectations of outcomes are consistent and shared as much as possible. There are some other changes around ensuring that not only is it trusted, that we trust the client, that we actually verify the client. So it becomes trust but verify. But fundamentally, the shift that's underway, and it's been underway through the rise of technology, all of the financial services industries are moving from a high trust model where the primary concern was the advisor was a proper chap that everyone knew and had the appropriate qualifications and the expertise, to a high, to a high integrity model where the data is clean, where the advisor is following process and practice, and that's documented and demonstratable, so that you can prove it to an insurer, you can prove it to the client, you can prove it to the regulator. That's the future we're moving to, but it is predicated on us having this high integrity data and using it to inform the conversations that we have with clients, to provide the context to translate the information into action. And I think that is that is that future playbook. And I think the other panelists, the panelists on this call, you're leading the industry in this direction, but thankfully the mainstream of the accounting profession is following very close behind you, supported by government and supported by our industry bodies.
Fascinating. And so I'm going to just switch tack here a little bit, because I want to go back to the point around the question around the customers, because Matt, totally agree about the high integrity and the high data. That's something that's really key to progress and being able to automate things and get workflows and processes working properly. But then it comes back to the clients, and the clients, are they doing what they're supposed to be doing, and are they good or bad clients? So this comes up quite a lot, and I think it's fascinating. So the question I have for Felicity and Stuart, and then I'll open it up to Matt and Ethan as well, is the concept of around a service level agreement for your clients, where if they don't do what you want them to do, you can kind of prove it and fire them and move on, or even, or have that agreement up front. How are you managing that now? Do you actually have an SLA? Do you proactively use that with your clients? Felicity?
We don't. We have an understanding. When we onboard a client, we have a chat about how it works in our firm and sort of what we expect from the client. One of the things that I do say when we're onboarding a new client is there's got to be some sort of chemistry, there's got to be some sort of trust and mutual respect. And if that's not there right at the beginning, then we're not the accountant for you. Obviously, that's a reasonably privileged position to be in. There are other accounting firms that will take whatever work that comes in the door. Though to be fair, I think most of them would be far more profitable if they lost the tail end, but that's a different conversation. But I think I have an upfront conversation. I've never needed a service agreement to sort of lean on. That's not to say that probably we shouldn't have one, but it's been a really open and honest conversation. And I find that open and honest communication with a client is the best way to hold on to them, to make sure you're servicing them properly, and to make them profitable.
Yeah, I think I'd just add to that. We're probably in the same boat there in terms of the level of service level agreement that we have is fairly base level in terms of protections for both parties, I think. So understanding what your roles and responsibility are, but they're sort of the entry level requirements, right? You will keep your records up to date, and you will respond to our queries, and but there's not a huge stick approach. I think so much of the SLA stuff that some people I see mandate can be quite easily taken care of as an upfront and a general philosophical conversation about our approach, and either on board or not on board. It's so much. If you're having an open and honest conversation up front, you're going to have a better relationship longer term. No one ever reads the fine print anyway, so let's just have a really broad discussion about how we do our business and why we think it's good for you, but up to you whether you accept or not. I think we have some other sort of, as part of our quality control checklist, to make sure that we are dealing with the right client. Like, as a philosophy, unless there's an exceptional circumstance, we only want to deal with clients that are on Xero. Okay. And that helps weed out clients that are potentially not profitable to our organization. And that's not to say that there's not other firms using other software. So that's one example of amongst any, but yeah, obviously, articulating a client, we do a lot of video conferencing, we use email, we expect you to reconcile your files in a regular fashion, but we don't say, if you don't do this, you are X out the door. So yeah, I think being open and honest and upfront as part of your onboarding is the best way to do that.
Before I jump to Ethan and Matt, I have a follow-up question on that, but also just want to encourage anyone watching the webinar, if you have any questions now for the panelists, please feel free to use the chat feature and just fire those questions through in the chat now, and we'll jump onto them. We've got a couple of minutes. It's probably the final question to the group, and then we'll start to answer any of those questions if there are any. So jump into the chat and fire away there. Before going to you, Matt and Ethan, I'm interested in the shift. We don't want to talk. We've done really well to not really talk about COVID. So well done, everybody. But that's obviously changed the engagement model quite a lot. So are you seeing that, you've mentioned this too a few times, that it's a lot more is just being done online, or are you still seeing customer meetings, face-to-face meetings coming back into building those personalities or building those relationships?
Look, I think that face-to-face meetings are coming back only because I feel like we as a firm and particularly me, I like seeing our clients, right? So we want to see them. It's been sometimes 2+ years until that's happened. So, but I think from an ongoing and revolving service, that doesn't mean that what we typically did as a monthly service on video for the last 2 years is then going to change to face-to-face. However, once every 3 months or once every 6 months, it might be an in-person because we can now do that. And I think that's great. But yeah, I mean, you touched on COVID, Brendan. I think COVID was an awesome thing to happen. Not from a virus perspective, but from an advisory perspective. It just made us speak to our clients so much more regularly and give clients a taste of what we can do for them and how we can help them. And a lot of our clients that we helped through that period have now stayed on as a formal and ongoing advice-based client because they really had an opportunity to taste our services that they may not otherwise have had an opportunity to experience. Yeah.
Really interesting how it has accelerated the change in the industry. Forcing that, that regulation change. Matt, I'm sure you're seeing a lot of that kind of stuff as well. So I'll get to you in that. Felicity, are you doing more face-to-face meetings, in-person meetings, or is it, or do you think it's just going to go online? What's the view there?
It's very similar to Stuart, but it's so fantastic to have the flexibility to be able to do it. And just seeing people juggling their children while also having the meeting, and sort of normalizing that I'm doing that at the same time, and we can do it, and we can sort of make these things work. And jumping in, I've had meetings with clients sitting in the car because they've got a child sort of playing sport, or they're on their way to another meeting, and it's a really efficient way to make sure that business is still happening and we're still doing the things and ticking them off and achieving the objectives. A lot of our clients on our advisory packages that we've done business disruption plans pre-COVID. I mean, they dusted those out and pulled them out, and we had an uptake in those sorts of services as well. So it's also obviously the meeting sort of formats have changed, but also the services as well, and the focus on those different services has sort of been quite interesting as well.
Thanks, Felicity. Matt, I saw you nodding there. There's
absolutely.
A lot of
yeah. And I can't help but agree wholeheartedly with both Stuart and Felicity around the transformation of the accounting industry. But I think that the other thing to recognise is one of the upsides of COVID is the uplift in digital literacy amongst customers and clients. QR codes weren't a thing 3 years ago, despite marketing efforts for years. They're now a natural process that we've all accepted. The digital literacy, the comfort level with having the conversation digitally to work asynchronously. My working hours might not be yours, and accepting asynchronous ways of working. That's one of the benefits of COVID, if we want to call it that. Or of the transformation of work over the last couple of years. And we have to recognise that's also happened with industry bodies and tax agencies. I've had a really interesting experience in my own role of I used to have to fly everywhere to meet people, particularly in the regulatory side, because they didn't do video calls. And now it's just as easy for us to spend 30 minutes getting on the same page, having a conversation on a video call without the 4 a.m. wake up call and the 6 a.m. flight. So happy with that change. But in terms of the ongoing transformation of the profession, the question I always leave everyone is, what are the things you've liked about the last 2 ways where we've had to work through fires, floods, and pandemics? Like, what are the things that we like about how we work that we want to keep as we sort of transition back to this hybrid way of working in the office, in buildings sometimes, in face-to-face meetings? What are the things that we've all benefited from, that we're going to keep and preserve and remember? And what are the stories we're going to tell our staff and our customers a decade from now about how we got through this and what we learnt and what kind of leaders we were as an industry with our customers? Because 10 years from now, there'll be a new generation of business owners that lived through COVID in primary school. They're going to be coming to us for advice. They're going to be coming to us asking questions. What are the leadership lessons we as advisors want to impart to our staff to impart to that next generation of business owners when this happens again, or if this happens again?
It's such a fundamental shift, and I think back that story there and bringing it back to how accountants and bookkeepers have really helped their clients through COVID, and bringing it back to the theme of, is it advisory or is it compliance? Because so much of what you were doing was helping with new regulation that have been spun out overnight to try and help businesses. And and to me, that's why there's such a blurred line between regulatory enforced. It's almost a compliance role, because you're interpreting the new rules and helping that small business, but you're helping. It's an advisory role to guide the business through that. And so it's just that blurred line, and what a customer thinks it is, advisory is, versus what accountants and bookkeepers think advisory is. And that's why I wanted to talk this through and flesh it out and see where those differences are. So really fascinating change in the industry. You mentioned QR codes. I've got another QR code to put in front of everybody again, so thank you for that segue. Just as we're starting to wrap up, Ethan, I might just come to you for a bit of a summary of how summary for today, what you thought and heard, and any advice for somebody out there, and then I'll just do that briefly around the room before we wrap up and hand back over to Alex from Xero magazine.
Great. Yeah, it's been a great discussion, and I've thoroughly enjoyed hearing from Stuart, Felicity, and Matt, and yourself, Brendan. I think the takeaway for me is that there is a shift, but it's probably not as dramatic as the marketing campaigns might suggest. I think there's a move, and the move has been happening for some time. COVID accelerated some aspects of that sort of move and the ways of working side of things, but I think fundamentally the role of advisors, the role of accountants, the role of bookkeepers has never been more visible and more important to small business, right? And that's what we're seeing with our customers. I mean, the connection that they've had as a result of over the last 18 months, 2 years, it's been amazing, frankly, to actually watch a lot of these companies move from sort of an internal focus to an external focus. We saw a lot of the high performing firms get out there. And I mean, the fact that Stuart and Felicity, you guys are jumping on this webinar, proves that, like, just the willingness to be out there front and center, leading the profession, sharing your insights, sharing the things that, it's not like we've got all the answers, but we're having a discussion, or opening the discussion. I think that's been an amazing outcome over the last 2 years. And it's certainly happened. Xero's done a great job at facilitating these kind of discussions for many years now. But I think, to answer your question, Matt, as to what we should keep doing this. We should keep having these conversations around what's challenging, what are the pressing issues, and certainly the advisory thing is front and center with that. So thanks for hosting us, Brendan. I'll pass to whoever's happy to jump in next.
Thank you, Ethan. I'll go to you, Matt, for your kind of outtake.
My outtake is we've been talking about automation, we've been talking about AI, we've been talking about using data, but the overarching missing piece, or the constant piece here, is actually our humanity, and actually being human with one another and being human with our clients. And I think acknowledging that and acknowledging the humanity of the accounting industry and the work that we've all been doing and continue to do to help businesses be more successful through quite evolving situations over the last couple of years is something that we should all take, pat ourselves on the back, and then, I hate saying it, but get back to it, because it's how we have an impact, and it's how we are having an impact on the wider world around us.
Awesome. Thanks, Matt. And thank you again for joining us today. A real privilege to have you with us. Thank you. Stuart?
Yeah, I think my take out of this today, it just sort of reaffirmed that as part of us as practitioners, I mean, use technology, but be yourself. Do things your way as an individual and as a practitioner and a professional. As a firm, do things your way. And the more that we speak as an industry about this, the more that I guess, achieve a broad consensus about what we're trying to do in terms of client benefit, but have our own unique ways about going about it. I'm not the advisor that's for everyone. I'm the advisor that likes doing things the way that Stuart delivers it, and Felicity will have her approach and other firms will have their approach, and everyone's got their unique take on things. And I think that diversity is what will make our industry stronger, not weaker. But you can only be yourself at the end of the day.
Couldn't agree more. Thanks, Stuart. And thanks again for joining the panel. It's fantastic to speak to you again on this. And then Felicity, just wrapping up with you. What's your outtake?
Yeah, I think what's become quite evident, and obviously Stuart and Matt just touched on it, but the future of accounting and advisory is actually all about people. We take the data and we take the information, but it's the relationship that enables us to decode that for our clients, but also to hold their hand a little bit. I mean, one of the biggest skills in the last 2 years has been empathy, of sort of sitting alongside people at some pretty low points, not even just financially for their businesses, but some marriage separations in terms of people being locked in their houses together. There's been a lot of the people side of it has been almost just as important as being able to unlock the data. And I think that if you don't like people, the future for accounting is not for you. But my goodness, if you do, how fun and exciting, and to be sort of part of people's lives in such a big way through the next sort of few decades.
Absolutely love that. And I think the human theme has absolutely come out of all four of the panelists. So thank you so much for that. And it's actually one of the topics that I wanted to have another webinar on. So just validated that that's a really important conversation for the whole industry. I do remember when COVID first hit and I jumped onto a panel or onto a webinar with a few hundred accountants in Australia, and how everybody was struggling with the human element, because the amount of businesses that were looking to fall over, it wasn't so much the business, it was the human behind the business, and accountants had to help them. So, there was this, it felt like it was a, it was a mass coaching exercise that had to happen there. Really, really important stuff to discuss and get out there, because I totally agree that the future of advisory is all about the human and interpreting that data. A lot of the themes that Matt's brought out around data integrity, client communication from all of you, making sure you got the right clients on board, and that engagement piece is super important. So thank you to everybody for that. And just wanted to hand over to Alex just for the wrap. And I'm not sure if there were any other questions that came to you directly, Alex. I haven't seen any come through yet.
No, well, first of all, thank you guys. I really enjoyed that. I think you've all kind of hit the nail on the head. I was going to say, I loved hearing your human stories and your different personalities come through, which I think you all kind of wrapped up at the end anyway. So we really appreciate that. I don't believe we do have any questions, but once again, if any questions come out, feel free to email me, alex@xumagazine.com. I can forward it to the right guys if it's anything particular about an app or an account. I'm happy to do that. We will be sending a recording out as well. Once again, free CPD points, so feel free to share around the office or anyone as well. Can all get that. And yeah, guys, I just really appreciate your time and your insight. I really found that useful. And enjoy the rest of the day wherever you are, guys. And I don't know what the weather's like. I'm gonna get some sleep. I'm sure you guys have got to work the rest of the day. So enjoyed that, and I look forward to seeing lots of you soon. Maybe a XeroCon, Xero Roadshows, something like that. I'm really looking forward to them being back. So, and just the last thing is, Ada, Ignition, and Xero are in our magazine, or especially Xero are in our magazine, so feel free to check it out whenever. There's loads of useful articles in there as well. So I appreciate your time, guys, and enjoy the rest of your day.
Thanks, everybody. Thanks for the panelists.